Is there a food crisis that's imminent on top of everything else that's going on in the world? Welcome to Macro Money. This is Ilya Spivak, head of Global Macro here at tastylive. And today we're going to talk about the latest offense on the food inflation front, India, which has decided that its cap on sugar, which seems to have single-handedly created, or almost single-handedly created, inflation problems in Japan that everybody is so worried about now, has now taken yet another step. We've gotten an announcement here just over the past week or so that what India is going to do is ban the export of some varietals of white rice. Now, of course, it should shock no one that white rice is an absolutely huge staple crop. And so to ban the export of white rice would be a major issue. That, of course, comes at the same time that we have concerns around wheat shipments, concerns around fertilizer shipments, concern around corn shipments, all linked to the Russia-Ukraine war. So is there a food shortage that's on the horizon here? Are we looking down the barrel of famine risk? Well, let's have a look and see just how much we should be worried about all of this. We're going to unpick a little bit what seems to be going on, how much interest there appears to be in it from markets, and how much risk there actually seems to be, and sort of what that risk means for a trader looking to take this story and see what it can look like in asset markets. So let's begin with just a sense of how much people care, because I think that's very important for this being an actually market-moving narrative. And this is data from Bloomberg. The Bloomberg Professional Terminal is an absolutely massive source of news flow, not just from Bloomberg itself, but from a whole host of data and news providers. And what they do is they use all of this data to give you a sense of how many stories you get around a particular narrative or a particular set of keywords. And what this chart is showing you is the number of stories mentioning the phrase, in quotes there, food crisis. And you can see that July marks something of a pop. That's the highest number of stories around this that we have seen since November of last year. There's, of course, a giant spike toward the middle of last year, immediately following Russia's invasion of Ukraine, because, of course, Russia and Ukraine are the number 1 and number 5 exporters of wheat globally. Now, this is not those kinds of spikes. No war has broken out. But it is certainly noteworthy that this is the most, let's say, traction that the idea of a food crisis has gotten. And that's not by accident. That makes some sense. Looking briefly at the situation in Russia and Ukraine before we get into India, we've had the breakdown of the Black Sea Grain Initiative, which was the agreement brokered by the United Nations and Turkey to allow for the safe passage of seaborne Ukrainian grain exports through the Black Sea, through Russian blockades, and out onto global markets. That arrangement was extended a few times, and then last month, it broke down. Since then, there's been meaningful escalation. Moscow's forces have taken to bombing grain silos in Ukrainian ports. On the Ukrainian side, sea drones have been used to attack Russian tankers. These are headlines that we've just seen over the past week or two. So it isn't necessarily out of sorts to say, well, this is some sort of a meaningful supply disruption risk for key foodstuffs, for key staple foods needed to keep, in particular, the poorer parts of the world reasonably fed. And of course, we know what happens when that isn't the case. Let's recall that the last time that there was a major disruption in staple supply, the world got the Arab Spring. So, over to India. India seems to be concerned that El Nino weather patterns have returned, and it's taken the preemptive step of saying we're going to make sure that there's not going to be domestic rice shortage. We're not going to ban the export of the longer grain, popular basmati rice. We're not going to ban the export of parboiled rice, which together, incidentally, account for close to 60% of everything that India exports. But the rest of it, for the most part, we're going to keep at home. This, by the way, is an escalation of a move from back in September of last year, where India introduced a 20% tariff on white rice exports. Here's what the white rice market looks like. This is data from the United Nations Food and Agriculture Organization, or FAO, which, at least in my research of the subject, seems to be the quintessential source of benchmark numbers on the rice market. There's not a single sort of tradable future for all of this. There is, of course, the U.S.-based, CME-based future, RR, for rough rice, but the situation in the U.S. and the situation globally is quite a bit different. In the U.S., there's actually been something of a decline in domestic rice prices for mostly local, mostly weather-related reasons. But on global markets, the situation is quite different. So you can see here, India is by far the largest rice exporter, with a market share close to 40%. The biggest single substitutes are Thailand and Vietnam. Together, they add up to about 27% of the market. They're less than 20% in isolation, but together they add up to almost a third of the market. The United States, as you can see, is something of a meaningful exporter, as is Pakistan. And the response has been, as you might expect. Here is that FAO All Rice Price Index that the United Nations agency puts together. You can see, first of all, on the left, the chart for the start of the year and how the year has progressed so far. That's the red line for 2023. Notice the steep rise for 2022. So that's how the market largely behaved last year. Then 2021, somewhat less so. That, of course, the way out of the pandemic and costs easing against the backdrop of improved supply chains. Last year, demand increasing largely because of recovering global demand and sort of mirroring the general recovery in global activity as economies reopened. But clearly here, this year, there is concern. And you can see here that most recently, a sharp increase in rice prices approaching the structural highs. So the market is certainly taking notice. Now, when some years back, Vietnam decided to ban rice exports, there was in fact retaliation from the likes of India and Pakistan and a few others that are big in the market, whereby they said, oh, well, you're going to ban exports, then we will too. And that led to a near 50%, a little bit more, rise in global rice prices, according to IMF and UN estimates. So This is by no means a trivial sort of thing. Rice, as I say, is a major, major staple for a very big swath of humanity. And to drive the price up significantly would have the potential, at least, to meaningfully complicate global disinflation efforts at a time when central banks are just feeling a little bit better about where things are going. Consider here, the red line is an average of major economies' 10-year break-even rates. Included in here are the US, Germany, the UK, Australia, and Japan, to give a sort of diverse regional swath of the major drivers here. And we use the 10-year break-even because all of these economies have a liquid 10-year inflation-adjusted bond from which to do this math. The break-even is the difference between the yield on nominal bonds, so what we typically say is the 10-year Treasury bond yield, and the inflation-adjusted version, which we in the U.S. call the 10-year TIPS yield. When you take the difference between those two, what you're left with as residual is the inflation adjustment needed to go from nominal to real. And so you get the bond market's inflation expectation as it is actually priced in. Not a forecast, not a guess, not some product of an economic model, the bond market's actual inflation forecast. What we see is that it leads global CPI, the Global Consumer Price Index, seemingly by about 6 months, give or take. You can see the peak in expectations occurred about 6 months before the peak in CPI. If we were to lag CPI by 6 months, you can see it generally lines up. The worrying part here is that expectations have stopped falling. Talked about this in spades in the US, but the concern here is disinflation appears to be running into something of an issue. In large part, at least in the US, in the UK to some extent, this has been attributed to stickiness in employment in the service sector, where there's been a lot of wage inflation that has been embedded into prices because during the pandemic, and incidentally persisting now, labor shortages have driven up wage growth. Just last Friday, we got the latest U.S. jobs report. Expectations were for average hourly earnings growth to slow to 4.2%. It bucked those and registered unchanged at 4.4%. In fact, wages are now actually growing faster than inflation in the United States. 3% in June, expected to nudge up just a bit to 3.3% for July in a report that we should see here on Thursday this week. So the story appears to be that you have this service sector part of inflation that isn't unwinding nearly as quickly as the part that took us from 10% inflation, give or take, for global CPI, now down to about 6%. Needless to say, most major central banks have a target of somewhere between 1 and 3, averaging about 2. So if we still need to come down by about 4 percentage points on global CPI, what expectations are doing here, given that they lead it by about 6 months, is something worrying. Now, if you were to toss into this mix a surge in food inflation, well, then you'd also have a problem that's going not just sideways, but pointedly the wrong way. Encouraging central banks to hold interest rates higher for longer, maybe even reboot a more aggressive rate hike cycle. Expectations seem to suggest it's all but over in Europe, is over in the US, will soon be over elsewhere. But if there's a surge in food inflation, well, all those things might well go out the window. And you might be in a situation where central banks have to move a lot firmer to curtail the impact, to cool price growth. And of course, the upshot there would be that you would hurt growth much more. If we're already in a recession in the Eurozone, we're flirting with one, or at least the equivalent of one in China. The US is something of a bright spot, but looking at the latest PMI numbers, activity has slowed. Now we're potentially, if there is this inflationary crisis on the food side of things, looking at, if it were to bear out, much tighter central banks, or at least the potential for much tighter central banks, and with them a situation where global growth would be much closer to recession, much more broadly, because the one leg that the stool now stands on, which is a relatively firm U.S. economy compared to the others, might well get kicked out with a more hawkish Fed. That's the risk. That's what this could do. Now let's consider how likely this is to actually materialize. Here are the main destinations for Indian white rice. You can see here that as we look at the latest bar for 2022, as we look at the bar for 2021, we can see big surges there as relative to recent years, going back to 2011 on this chart. And you can see that the big areas of demand are Africa and Asia. Here's Africa. Here's Asia. And then there's a smattering of a little bit here and a little bit there from Latin America, from North America, from the Oceanic countries, Australia and New Zealand. But mainly what we're talking about is Africa and Asia. Now, we can break this down further. You can see here, Asia is that big red box. There's the assortment of countries there. Africa is the big yellow box. There's the assortment of countries there. Everything else, Europe in the purple, North America in the blue, Oceania in orange, South America in green, miscellaneous in that little sliver of gray at the bottom. That whole section is much smaller than the red and yellow put together. So clearly this is a market very skewed. What we find when we look in particular at the Asia part of this is that China is actually not the kind of dominant thing here that you might have expected. The big hitters are Iran, Saudi Arabia, Iraq, UAE, and then a smattering of things like Yemen, Oman, Turkey, Kuwait. And those things seem to add up to much more than, let's say, China plus Japan plus the usual suspects in Southeast Asia plus Korea. There's certainly a meaningful impact from Indonesia, a meaningful impact from the Philippines. But when we say Asia, it seems like what we're really talking about is the Middle East much more so than East Asia. And of course, in Africa, Benin stands out, but otherwise it seems to be fairly evenly spread out. Ivory Coast is pretty up there also, but everything else seems to be fairly evenly spread. And so what we end up with is something that looks like this, where we have global GDP share by region And if you look at the Asia and Pacific region, it is, of course, dominant at about 46%. But if we take China out of that mix, which is about 20% by itself, you're not left with a whole lot. So if we were to isolate the Middle East and Africa, Middle East would ostensibly fall within that Asia and Pacific part of the mix, were you to look at this here and say the red box, as it were, is that Asia box. That plus the orange one would be Asia Pacific. Take China out of it, it's not nearly as big. Take Japan out of it, it's even smaller. Take things like Korea, Indonesia, Malaysia out of it, it's smaller still. And what this suggests is that it's about the Middle East and Africa first and foremost for rice exports. You can see those two areas are relatively small in terms of their global contribution to GDP. Now, of course, that in no way dismisses how incredibly detrimental it would be if rice prices were to go up in those countries. It would be tremendously difficult. In fact, there's a food inflation crisis there already. This would only exacerbate it. But in terms of these economies' contribution to global inflation, it's probably not the kind of shock that really throws the entire game off course. Unless, and this is a very big unless, whatever instability around food scarcity there is in these places, given their more challenging security situation than, let's say, North America or Western Europe, you had some sort of meaningful flare-up geopolitically. So a war, a major disruption to other commodity shipments like oil through the Gulf of Aden or the Strait of Hormuz, say, some such thing. If you were to arrive at an Arab Spring type of situation, and suddenly there was a major geopolitical disruption, well, then surely, yes, that could have knock-on effects that are far and wide. But looking at just the contribution that these heavily impacted countries would have on the world CPI number, it doesn't seem to be particularly huge. So maybe we at least don't have the global influence of what this is. We should also importantly keep in mind that what India has done here is preemptive. We don't know if El Nino is going to disrupt rice output. As a matter of fact, that very same report from the United Nations that we were looking at citing this surge in price data tells us that in the 6 instances of significant El Nino weather phenomenon over the past century, only twice was it disruptive of rice production in any kind of meaningful way. So it is by no means a foregone conclusion that there's a rice shortage. It could very well be that we find out that these preemptive measures aren't necessary. And we don't really know what the market actually looks like for a few months yet. Likewise, India has said that it will make carve-outs in the tariff and in the export ban for countries to ensure food security, but they'll have to apply to the Indian government. So ostensibly, someplace like Iran or someplace like Benin would need to go to India and say, hey, this is a food security issue for us. You need to let us ship out this rice. And ostensibly, the Indian government would weigh those on their merits and say, yes, you can ship it. So It could be that this is not much of an issue, even for the countries where the impact would be greatest. We just don't know at this point, because there's not a one-off story here that says this is definitely a problem. But what it isn't at the moment, and what it might not be even if it is a problem for these areas, is an inflationary risk of outsized proportions. Nor do we have a food crisis here yet, necessarily. Let's consider what's actually happened to the price of wheat since Russia has abandoned this Black Sea Global Initiative. We talked about this 2 weeks ago, but here we have an update. So that's the wheat future benchmark, the ZW future, and you can see there in the red box, that's where Russia pulls the plug. Well, you can see that wheat prices spiked at the initial invasion of Ukraine. Here, not surprisingly, when we look at where we were looking at these narratives here, they generally line up. That spike in wheat prices, not surprisingly, gives us more of a conversation about a food crisis. But what's happened since then is that, of course, the price has actually fallen. And we've talked about this at length here and in isolation on Macro Money, where we've pointed out that the prices of commodities, where Russia is the main exporter, have fallen much more than commodities in general, seemingly because Russia is trying to make sure it retains market share while it's being cut out by sanctions from most markets. So in those markets where it has been given a bit of room, like energy and grain, it's trying to undercut the competition and retain market share as much as it possibly can. So even in the wake of this grain deal falling apart, even in the wake of the escalation that we've seen, bombing of silos by Russia in Ukrainian ports, attacks on tankers by Ukrainian sea drones, that has not really changed this story. The trend in wheat prices very much remains down. It may very well be the same kind of deflated impact when we look at rice, obviously for its own reasons, but there is not an imminent famine here, at least that we can see at the moment. As a matter of fact, if we look at inflation-adjusted food prices, this is now food prices inclusive of the impact of inflation, which of course means inflation was stripped out. The impact of inflation was essentially adjusted for to give you real global prices. This is from the International Monetary Fund, the IMF. And you can see here that same pop that we just saw in wheat as Russia initially invaded Ukraine. But since then, food prices have actually receded, and in real terms. So it would seem that there is not a food crisis here, at least today. Maybe there will be one later. This certainly bodes watching in the next several months. But for the moment, seems like a bit too early to panic. And that is Macro Money for today. Thank you very much for joining me. As ever, I am here Monday through Thursday, right after Overtime, which is a show I do with Chris Vecchio, head of Futures and Forex here at Tasty Live, where we try to make sense of the day's events after the Wall Street close and figure out where they might be going next. I'm also on with Chris for Futures Power Hour on Fridays, on with Tom and Tony for First Call on Sunday evenings, opining on Twitter, yes, Twitter, at Ilya Spivak, and writing for the news and insights section on tastylive.com. If you are in the San Francisco area, there's a Tasty Live event happening here on Saturday. I will be there hanging out. Come join us. And I, of course, will be right back here for Macro Money tomorrow. See you then, folks. Happy trading.